Hello everyone, welcome back to our channel. Today we have an exciting topic to dive into.
All right, let's dive into a trading strategy that a lot of pros use to flip a really common and, let's be honest, painful trading trap into a high probability setup. We're going to talk about mastering the resistance to support flip, also known as the launchpad. And we're going to start with a feeling I bet you know all too well.
So, has this ever happened to you? You're watching a price that's been heading down, and then boom, it smashes through a key level. The FOMO, the fear of missing out, hits you hard. You jump in and buy that big green candle, thinking it's going to the moon, and then nothing. It just stalls, reverses, and suddenly you're stuck in a losing trade. It's a classic trap, and today we're going to learn how to avoid it for good.
Okay, before we get to the good stuff, we need to be on the same page about two basic ideas. First, think of resistance as a ceiling. Every time the price goes up and hits it, sellers step in and smack it back down. And support, well, that's the floor. When the price drops to that level, buyers show up and hold the line. That's it, a ceiling and a floor. Simple, right?
Now, this is where the magic happens. The absolute core of this entire strategy is what happens when that ceiling finally breaks. Because through a really cool shift in market psychology, that old ceiling becomes the new floor. This transformation, this is what we call the flip.
So what's actually going on behind the scenes here? It's a principle called change in polarity. When the price finally breaks through that resistance ceiling, two key things happen. First, all the sellers who shorted the stock right there, they're now trapped in losing money. Second, you have a new wave of buyers who saw the breakout and are now eagerly waiting for a chance to get in at a good price. So when the price pulls back to that old ceiling, the trapped sellers buy to cover their losses, and the new buyers jump in. All that buying pressure is what turns the old ceiling into a rock-solid new floor.
And here's the whole sequence in 4 simple steps. First, you see the rejection. The price keeps hitting that ceiling and failing. Then you get the breakout, a powerful move right through it. But, and this is the most important part, we don't chase it. We patiently wait for the retest, where the price comes back down to that old ceiling. And when it holds and bounces, that's the launch. Rejection, breakout, retest, launch. That's the pattern. But hold on. Before any of this can work, we have to be absolutely sure that our resistance line is, actually real. It needs to be a level the market truly respects. You can't just draw a line on a chart and hope for the best. And that's where our first non-negotiable rule comes into play, the 3-touch rule. Remember this number, 3. It's not 1, it's not 2. You need a minimum of 3 touches to consider a trend line valid. And this isn't some random number I pulled out of thin air, there's a very clear logic behind it.
Look, here's why it's so important. The first 2 points on a chart, well, they just establish the angle of a line. Anyone can connect 2 dots. It's that third touch, that third rejection. That's the market confirming to you, hey, we see this line and we respect it as a barrier. Think about it. If the market doesn't treat it like a strong ceiling, why would it ever treat it like a strong floor? You need a strong roof before you can build a solid foundation on it.
And this quote just says it all, doesn't it? Chasing that huge, exciting green candle is an amateur move. It's driven by pure emotion. The professional, on the other hand, is patient. They have a plan. They know the best entry isn't in the middle of all that chaotic buying, but in the calm, calculated retest that comes after.
Okay, so we found a valid trend line with 3 touches, and we've seen the breakout. Now it's go time. Let's talk about the action plan. How do we actually execute this trade with a precise entry, a smart stop loss, and a clear target?
Here's the entire game plan, laid out nice and simple. For our entry, we're looking for a specific bullish candle right on that new support line. Our stop loss goes just below that new support. Why? Because if the price breaks back below it, our whole idea is wrong, and we want to get out with a tiny loss. And for our profit target, we aim for the previous major highs. Those are logical spots where sellers showed up before, so they're great places to think about taking some profit.
Now let's zoom in on that entry trigger, because this is absolutely critical. We are not just blindly buying the second the price touches the line. We are waiting for proof. We need to see a clear sign of bullish rejection, something like a hammer candle, with that long wick at the bottom showing buyers rushed in, or a bullish engulfing pattern, where a green candle just completely swallows the previous red one. This candle is our final green light. It's the market screaming that buyers have taken control and are defending this new floor.
So why do we go through all this trouble? Why not just buy the breakout and hope for the best? Because this patient, methodical approach gives you a massive strategic edge. It's the difference between gambling and trading with a plan.
If you take only one thing away today, let it be this 3-word mantra: break, retest, flip. This simple process is, hands down, one of the safest ways to trade a reversal. Because you aren't guessing the trend is changing, you are waiting for the market to hand you clear, undeniable proof that the power has already shifted from the sellers to the buyers.
I love this saying because it perfectly captures the spirit of this strategy. Buying a frantic breakout is like trying to catch a falling knife. It's just dangerous and unpredictable. Instead, we wait. We let the knife hit the ground. We watch it bounce. And only then, once it is proven that it's a solid floor, do we even think about picking it up.
So I'll leave you with this final thought. What's the real difference between chasing a price and patiently waiting for a launch pad? Well, one is a gamble fueled by anxiety and emotion. The other is a calculated professional strategy based on cold, hard evidence. The choice is yours.
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.